welcome to another episode of Equity Mates. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm good, Bryce. We're on a bit of a different couch setup on this Tuesday afternoon.
Yeah.
And that's because we're joined in the studio by a fund manager extraordinaire, global small cap portfolio manager at Ausbil Investment Management, Tobias Bucks. Thanks for joining us.
Hi guys, thanks.
So Tobias, we're in the middle of reporting season, both in Australia but also overseas. We wanted to pick your brain for two reasons. First of all, because you're an expert in global stocks, and we're particularly interested in what's happening over in the US. But a lot's spoken about, the big end of the market. Apple breaking $100 billion in revenue, Amazon breaking $100 billion, Microsoft breaking $40 billion. But that's all been spoken about. We want to hear what's going on in the small end of the market with some of the small cap stocks that you've been watching. You've given us three before the show. So we really, in this episode, just want to hear about these companies for people who are unfamiliar, what they do, and then anything interesting that's come out of the recent reporting season. So the first company you gave us was Trade Desk. It trades on the NASDAQ with the ticker TTD. So to kick us off, can you tell us a little bit about Trade Desk?
Yeah, Trade Desk reports this coming Friday.
Oh, okay.
Right, so we're waiting for this one. The other two have reported.
Okay.
So the Trade Desk, so the Trade Desk is a leader in digital programmatic advertising. So effectively, anytime you see an advert anywhere on any digital device, it's been bid for, and people bid for that inventory because they want to access a particular user. And you see Facebook and you see Alphabet have a big control over the internet, and they control therefore a lot of the advertising. But in all the other areas of the internet and all digital content, whether you're watching video on demand or whether you're watching something on your phone or looking at any website or any sort of digital or radio or with audio, including obviously a lot of the podcasts people listen to, etc. You want to advertise on that, and to get there, you need someone to help you advertise, and you need to know things. The first thing you need to know is who you're advertising to, and you want to know what the price is to pay for that advert, and then you want to secure that advert. And Trade Desk helps people do those three things. So for anyone wanting to advertise digitally that doesn't want to use Google and doesn't or Alphabet or Facebook, you kind of end up using the Trade Desk, and that's where you've seen Amazon and the Chinese big players go, and lots of players are now going.
So you actually spoke about Trade Desk when we got you on the show at some point last year. Have you brought it up again today, expecting good things this coming Friday from a reporting season, or are you scratching it off the watch list? What are you expecting to come out from their report?
Well, it's our biggest position, so we're expecting a good number.
Well, fingers crossed.
Yeah. We sat through a lot of results. We've been shareholders for over 2.5 years now, and it's gone up a lot in that time. And each time we go through a result, we get less and less nervous given what we know about the quality of the management team and what's going on. This Friday, I think what's important for investors is stocks where you can see that the investment case is very compelling. They will trade on expensive valuations, and there's a lot of growth built into those. And so we first invested in Trade Desk, there was a lot of unrecognized growth. We could see the market thought it was trading on 60 times earnings. It was actually trading nearer 40 times earnings. And market wasn't giving it credit for its growth profile. You fast forward to now and it's on over 200 times earnings. The market clearly understands that it's going to go places. It's gone from a $3.5 billion market cap stock to almost $40 billion market cap stock. So there's a lot built in.
When does it stop being a small cap?
Yeah, I was just going to say that. Yeah.
So it's a key point. So it leaves the indices and goes into the mid-cap indices is probably the best watershed definition you can get. And that's up to the MSCI. So in the US market, things stop being a small cap and become a mid-cap in sort of the high teens billions. And in Europe and the rest of the world, it's slightly lower, about 7 to 8 billion in Europe, you become a mid-cap.
Yeah, right. Just out of interest, how did COVID affect Trade Desk? Did it make you reassess anything? Was it good for Trade Desk? What was the impact?
It was good. We reassessed everything in the portfolio. We did exit a couple of great emerging global titans that we thought would be structurally under pressure over the next few years, given how COVID was going to play out, to do with out-of-home advertising, things about going into the city. aeroplane and manufacture, things like that, we're going to struggle. And we did add to positions we thought would benefit. And people consuming digital content, as you guys very well aware of, experts yourself.
We actually need trade desks.
Yeah.
You do. It's gone through the roof. I mean, the thing about the trade desk is we felt it was turning the lights on for anyone who wanted to access the internet. You could find out who you wanted to sell an advert to and you get a very good price. And if you put the money through Alphabet and Facebook, it wasn't as clear to us that you might have seen or got such a good deal. And that's just accelerated. We've got Amazon, Disney, as I say, all the Chinese players, Audible. Everyone's now using the trade desk. So yeah,
wow.
give them a call. They're in Sydney.
Yeah.
We should, yeah. Look, we could talk about digital advertising in the trade desk all day, but unfortunately we don't have all day. The next stock that you are having a look at is Atkr. Am I saying that right?
Yeah, 100%. ATKORE.
And that trades in New York with the ticker ATKR. So I haven't heard about this company before. Can you tell us what it does?
Yeah, so they basically make electrical and plastic conduit for cables. So if you ever go into a car park, it's probably the best place people to see it. It's called an electrical raceway. It's like an aluminium tray that's hanging off the ceiling.
Yeah.
It's got loads of cables. Or if you have a riser in a big building, there'll be a riser with power and telecom cables. And demand for that's going up a lot. The reason why it's really interesting is it is also an emerging titan. Just like the trade desk, was emerging, and you might say now it's no longer really emerging. It is a titan now. But Atkr is also an emerging global titan with lots of unrecognized growth. Now, it's not in something sexy, like programmatic digital advertising. It's in something really bog standard. And actually, people we didn't think really understood the business. I've been to Chicago. I've met people in the States who work with them. I know what they do. And when we saw the business with a management team that was cutting costs, improving manufacturing, improving its distribution, and better delivery time to customers. So obviously the key thing is if you've got a building site and tradesmen on site, it's not so much how much the electric conduit costs. It's more how much does it disrupt your build and the other trades if it's not there on time. And so that's a key point. And the stock in November was trading on 3 times earnings. So let's just compare that to the trade desk that got up to almost 300 times earnings. So that's a very different multiple, but no less an area that investors can make money and you can find really good companies.
This is what I love chatting to you. Well, this is why I love chatting to you, because you always bring these obscure companies that it's just like, who would have thought to be investing in that? In a company like this, you say they're becoming a titan. Like, are they just fresh into the space, or their competitors are waning a little bit? What's the dynamic there?
It's more fragmented market. They've been there a long time, but delivering conduit in the US, obviously it's a big thing in everywhere, and it's about being local. So we like them because they're never going to be more than 500 miles production to site anywhere in the US, which is really important. They always deliver on time, and we just see growth getting better and better. The stock was trading on 3 times earnings at $20 in November. It's now on $60. They've delivered knockout result, another knockout result, and guidance is going up, and the market's still not looking at it. 3 analysts cover the stock. There's 3.
Wow, soon to be many more.
Their numbers are wrong. They've been wrong for the last 2 years. They keep undercutting it. So it's just I think it's interesting to make sure that you don't get focused on what you think the next thing, whether it's robotic process automation or anything is, or AI. That's great, and you should make money out of that. But at the same time, don't forget what makes the world go round.
Electrical conduit.
Yeah.
I guess the question is.
Data centers, right? That's the bit that's missing. Like, data centers have driven this thing's growth hugely.
Yeah.
And the market's looking at it like it's a non-resi construction play.
Yeah.
But that's just not missing the nuance completely.
Yeah.
I feel like people would look at a company like this and think that it's making a commodity product, and so like it won't have a lot of pricing power. It needs to make sure its service is first class, and it needs to make sure it's cutting costs. But it's always going to be in a really competitive market because it's a commodity. Is that right, or like how did you look at the company and see something that other people weren't seeing?
Yeah, it's more of a commodity than lots of things, but lots of things are a commodity. Like robotic process automation is an interesting area of the future where you're going to get computers to basically work out what all the humans were doing, work out what it was with an AI, work out how to do it better, and it's just software. It's servers. Now that is a commodity at one point. Right now they're charging people for it, but given that it's a server, it's just servers. So once that software's built, how do you premium price? And so the key question is, how do you price something? And with software, we know how you price something. You do software as a service, there's add-ons. Even the games industry's worked out nest eggs and other ways, and downloadable content and other ways to make money. So it's about premium pricing, always. And they've got an ability to price their product at a premium because they deliver it and they manufacture it well.
Yeah. Okay.
And they also have other things. They brought out a new something Glide, I can't remember the trademark, that enables you to pull one cable through another cable easier. So
I've seen people try to do that. It's tough.
It's tough stuff. So they are innovating, but I think the key, when you say how does an investor look, what I want to look premium pricing. What is it about your pricing strategy? How can you charge decent prices and margins compared to your competitors? Fair? They've got to be fair, because you never want to invest in a company that's not charging a fair price, because you're going to lose that money soon.
Yeah.
But at the same time, it's the way they work out their premium pricing strategies, and that's something people should always be aware of. Like whenever you saw those businesses like realestate.com in Australia, right, kept on going up, and they kept upgrading estimates for ages, way much more than people originally thought, and the reason was they just premium priced.
Yeah.
And there's just constant premium pricing strategies, and that's a really easy premium pricing strategy to sort of look at as a case study for an investor and work out what premium pricing means. And then if you see it in other businesses and they can actually do it, that's something the market will never realise, won't have the imagination to give credit for.
Now, I just want to get a list of all the companies that you think can premium price. But
Maybe that's a week segment for next week.
yeah.
I remember leaving the interview last time Tobias was on the show, and we were literally like, all right, where's your watch list? Just dump it. Final stock, Tobias, is Generac. New York as well. GNRC is the ticker. What's the deal? What's Generac all about?
So they used to make only generators for resi and non-resi, so industry, hospitals, etc. And then over the last 5 years, they made a lot of acquisitions and transformed to solving a local need in the US, to solving that need on a local basis, but globally. And they've also now gone into smart grids and wall batteries. So they've made a lot of money, they're really good at generators, and you see a lot of things like a really bad grid system, forest fires, hurricanes, really drive up demand for their generators. But they went out and bought an Italian business that gave them access to the emerging markets. They bought a business that gave them wall batteries, they bought businesses in smart grid technology, both on the hardware side and the software side, and they bought an inverter business, or they got an inverter business as one of their acquisitions. So now they're everywhere when it comes to making power at the local, whether it's just your house or whether it's a small localized grid somewhere where you've got a few houses and a few generation assets, and they're all over that. And that's what they do.
So with companies like that, where they do something really well and then they go, I guess, on an acquisition spree and acquire a whole lot of new companies, or open up a whole lot of new business areas, there's some that work really well and some that don't and are value destructive. Was there anything in Generac's latest earnings report that indicated whether the acquisitions were value creative or value destructive?
Very much so. I mean, that was one of the key things we're looking at, and they were all accretive. Generally, if you find businesses go out and buy another business, it's like, what for? And I think that's the key question. And in this case, they've made small acquisitions, small in terms of size of company and the amount they paid for it, and they bought tech. They bought leading technology. And so why? What for? Well, I'm going to plug that technology into my manufacturing and my distribution networks. That makes a lot of sense.
Do you go out and do like full due diligence on the companies that they're acquiring just as much as you would on Generac as an initial investment, to understand yourself if it's a good...
You'll eventually get the name of the company.
Yeah, I know, whatever. just as,
You
to
got
understand
it.
yourself. Whatever.
As much as we can. I mean, you can never certify that that something's not going to go wrong, clearly, but you do as much as we can. And generally, the good companies will be open and honest and say, look, here's the box, here's what we bought. Yeah. And they'll tell you very clearly, this is how it fits into our acquisition schedule. That's another thing. If a company comes out with an acquisition that is not well flagged, not in terms of who they've actually bought, but in terms of how much money, why, and what for, and how they're going to fit in. If it's not, if it's unexpected, huge alarm bells.
Yeah.
Like when the Indian IT company went out and bought a construction firm, And then 2 weeks later, the chairman admitted the whole thing was a complete fraud. And they bought the construction firm for access to cash. Like, and someone makes a weird acquisition, you've got to be like, hang on. Yeah.
So it feels like the structural, there's a lot of structural tailwinds in that space, both in the move to home batteries and all of that stuff, and then also we lived through the bushfires in Australia, and California had the same thing, and the demand for generators went up because of power outages and stuff like that. So it feels like there's a lot of structural tailwinds for this company. Is the market pricing that in at the moment?
It tries to. I don't think it is. Share price has gone up a lot over the last 2 years. We go back, company reported early last week. We go back the week before that, market was expecting, I'm pretty sure of this, off the top of my head, high teens growth, revenue growth for the next year and possibly the next few years. They came out and said we're going to do 25 to 30%. So roll forward a week and there's the unrecognised growth being delivered to you in a result. And stock's up 15% last week. Do I think it should be up more? Yeah. When you look at it, it's accelerating. Why is it accelerating? Well, because the segment mix is making it accelerate. They're selling less they're selling generators and loads of them, but they're also selling more of this other stuff. And the market can see in the future, you've got a company that's gone from a niche leader in generators, who some weird fund managers might say is an emerging global titan, and I'm buying loads. And you roll forward and it's like, well, this thing's 24 billion market cap, doing $3.5 billion of sales. It's not yet a titan, but it'll get there, I think. So, yeah. I'll leave it there.
I feel like if we were going to label this episode, it would be Emerging Global Titans.
Yes.
That's what we're all about.
In a very diverse range of industries, digital advertising, construction equipment, and then electrical generation.
Yeah. Well, Tobias, unfortunately, that is all we have time for today, but thank you very much for joining us on Equity Mates. Very much looking forward to having you back on, because I know this episode is going to be a hit, and we are looking forward to unpacking your mind and watch list a little bit further throughout the year. So thank you very much.
Big pleasure. Thanks, guys.
Thanks, Tobias.
Thanks.
That brings us to the end of another episode of Equity Mates. As always, you can find out more information about what we do at equitymates.com. You can send us an email at contact@equitymates.com as well. But tomorrow, Ren, Watchlist Wednesday.
Watchlist Wednesday, we're bringing it back for a third time. We're obviously doing something right. And we've got Owen from Rask Invest joining us to tell us 3 stocks on his watch list. So you won't want to miss that episode. See you tomorrow.